Hi, it's Lee Goldstein. I want to welcome you to the 10-Minute Trades Weekly Wrap-Up. This is a summary of the trades that we took or simulated or watched in our trade room, and it's Friday, February 25th. So relax, close your eyes, and listen, and I'll go over all the events of the week that we were watching this week. Now, Monday was President's Day, and there were no official trade rooms, but there were two reports that we would have traded: the Euro French flash manufacturing services. And that was an excellent possible trade if you took it. The price burst up on good French news in terms of their manufacturing and services portion of their economy. And then that was at 3:15 in the morning on Monday. And at 3:30, the German version of the same report didn't really do that much. It would have filled you short, and then it never followed through, and you probably would have been able to get out of that trade with a small loss. And then at 4:30 in the morning, an hour after the German report, the British report had basically no response. So there was no offset. Remember last week in the podcast, we defined offset, the difference between the news that's expected and the forecast. If the offset is large, you often get a better move in the index that you're trading. So Monday, no trade rooms, but there was a very possible strong trade if you took that French flash manufacturing services trade. Tuesday, our first trade room was at 9:45 in the morning, and that was the U.S. version of the flash services manufacturing report. And we would have traded gold on that. We were just watching it because it's a report that we have not traded it a lot recently, and it would have been a nice trade on gold. So we'll be looking to very possibly trade that report going forward, the U.S. flash manufacturing services report. And then 15 minutes later, there was U.S. CB consumer confidence, and that traded with Richmond, Virginia's manufacturing Fed report. And it was a very small move. We used the trap trade setup for that report, and it was a very small move. We were able to grab about $40 in profit. And as usual, that Richmond manufacturing report came out early. It was about 15 seconds before the consumer confidence news. So the consumer confidence news was positive. It had a good offset, but it really just didn't really move the market that much. And this week has been a difficult week, and I'll get into that in a second when I discuss the next trade. Or when we get into Wednesday, we had another trade this evening that was quite a surprise. The Australian Wage Price Index, which is a price oriented report, how much the government and businesses are paying for people's wages. And that was a very big increase in that number. And the Australian dollar really had a very big move on that report. And we traded that live, and we had a nice little profit on that report. So that's definitely a event that we're going to get a daily market report for it going forward, and that should be a new addition to our arsenal of trade events. And we were going to stay in the room and trade the New Zealand rate statement, and it really didn't move very dramatically in a reasonable period of time. But I decided not to do that particular trade room because of liquidity issues in the Australian dollar. It doesn't have very good orders available to place, and you get bad fills. So we just did the Australian trade, and anybody that came into the room was very happy because they made money on that Australian report. And that was Wednesday. As we went into Thursday, the world got grimmer and darker. Now, I misspoke. That was Tuesday, okay, not Wednesday. Wednesday, but I still maintain the world got grimmer and darker on Wednesday. Wednesday, we had the API report. The oil report was a day late because of President's Day. The crude oil reports get delayed by one day. Now, the API report has been a family money trade. Family money trades have been not in very large quantity at the beginning of the year because we're reanalyzing setups, profitability, and they'll be making a comeback, especially next week. We have two or three family money trades next week. API has not been trading that well for months, but over the past 6 weeks, we've noticed that it is starting to behave better. And it was a very interesting trade on Wednesday. I had a target, a single target of 15 ticks, and I was expecting a good move because the oil market had moved over $4 that day, had a very dramatic move, and I was expecting a pretty big explosion in the oil market because of what was going on in Ukraine. Now, you know what? This video is not scripted. And if I misspeak, I'm going to say it. So the big oil move was actually the day after the API report. But I was expecting a big move because oil had been so volatile all week. And obviously because of Ukraine. It's the same reason, but I was misspoke in that oil had its big move the day after the API report. But I still, for the same reason, expected a large move on API. We got it. It hit our 15 tick target. And if API continues to trade well, it's very possible it could become a family money trade again, which would be nice. There was an evening Australian report, the private capitalization expenditures that we used to trade years ago, used to be a big mover, and it really had no impact at all on the Australian dollar this quarter. That's a quarterly report. I'll keep an eye on it, but I don't really have high hopes for that report in the current market environment. When we got into the trade room on Thursday, the invasion of Ukraine had begun and the markets were tremendously volatile. And I was very disappointed. Obviously, I was incredibly disappointed because I'm an anti-war person and I don't want to get into any politics at all, but I was very disappointed that there was an invasion of any kind anywhere. But it affects the markets very negatively in making them so volatile that news reports get ignored or they respond bizarrely to the news. In other words, the index you're trading doesn't act properly. It doesn't act the way you expect it. Preliminary GDP was trading with the Thursday unemployment claims. We have a great new setup. I really thought it would work, but I was being very careful. I only traded one contract. It didn't work. And in fact, none of our setups would have worked. The range trade didn't work, nor did the breakout. We only traded one contract and lost $100, $110 on that trade. And that was the idea. Keep the losses small, keep the risk low, because the market was extremely volatile. We also had new home sales, and there wasn't much of a response to that report. The natural gas report was at 10:30, and people who traded that had a big winner. It was a great report. But what's interesting is the aftermarket natural gas didn't work, probably because of market volatility, and possibly because of Ukraine. The price of gas and oil was being pushed up, and that's the direction it kept moving after the report. And then the oil report was at 11 o'clock on Thursday, a half hour later than normal and a day later than normal, and that just didn't work. It would have been a stop out, not a disastrous stop out, just a normal, typical, not working kind of trade. And that oil report, you know, it would have been a loser if you took it. And the after news oil trade, the 3 minute, didn't work either. Again, being pushed in a certain direction nullifies the ability to take an opposite direction trade. And that's what the after news trade does. And then on Friday, we had two reports. The invasion was going full steam. I kind of decided I didn't want to trade Friday morning, and it was a very strange move. It pushed down for PCE price index with core durable goods in the U.S. I don't think it would have been a very good trade. One of our members got stopped on it. And then at 10 a.m., we were looking originally to trade the revised University of Michigan price data, which can be an inflation report. And it was trading with pending homes. And I definitely decided the markets were just too volatile because of the Ukraine situation. And we decided to wait until next week to put our money at risk. We've got the U.S. jobs report. We'll trade that no matter what's going on in Ukraine or in the world. We got the ADP report on Wednesday, the ISM report. So Australia GDP, a lot of good reports next week that will trade regardless of what's going on in the world, because those big reports, they usually move the market in a predictable way. So it's a short wrap up this week, the week of February 25th, Friday. And, I hope you enjoyed these podcasts. They're unscripted. We love doing them. This is episode 13. We're going to keep doing them at least once a week, maybe twice, Mondays and Fridays. And eventually we're going to post them on all the places where you normally get your podcasts, iTunes and iHeart and all the podcast hosts, Spotify. So I want to thank you for watching. This was our weekly wrap up with 10-minute trades. And my name is Lee Goldstein. I'm the trading director. And if you like what you hear with all of this information, you can join our trade room and experience all of this for yourself. Let me show you what you got to do. So if you're not a trade room member, just www.jointhetraderoom.com. How clever is that? www.jointhetraderoom.com. $97 a month. We'll teach you how to trade the way that we trade. We have a good time. We learn. We laugh, we take it seriously, and we want you to join our trade room. So come join us. Thanks for watching, and I'll see everybody at the wrap up next week. Take care.